News is out. Elon Musk to acquire Twitter. It will become a private company. It's going to be Twitter's to be acquired by an entity wholly owned by Elon Musk for $54.24. And 20 cents per share in cash. An evaluation valued at approximately $44 billion. This is the amount that was originally proposed.
United States, President Obama.
All right. Today is Monday, the 25th of April. This is a recap for the stock market activities today. Folks, I got a good one for you tonight. And what a day, what a day, what a day. From the wild ride action in the stock market to the news that we got of Elon Musk acquiring Twitter, finally, you cannot get this kind of action from Netflix at all. And this is why we love what we do. We will talk about everything that happened today and a lot more. And here it is, in focus tonight. Elon Musk buys Twitter. It is official. It's done. It's over. And here comes the meltdown. And then let's talk about the tape that we got today. And lastly, earnings reviews. We start with the breaking news that we got today. Elon Musk buys Twitter. It is official. It's done. And let me just say this because I know we will get new viewers watching this video. I am not a fan of Elon Musk. Matter of fact, I am a critic of Elon Musk and his cult. I call him Reverend Elon Musk. Yet I am supportive of his endeavor for free speech. Let's back up and track the events as we got them today. In the morning, we got the story, and it is a stunning story, by the way, that Reverend Elon Musk raged at the Saudi PIF, the Public Investment Fund. This is the government fund, because they went back and forth during the funding secured episode. Now, we know that the SEC is in a coma, and it has been in a coma for a long, long time. So they settled with Reverend Elon Musk. But now we have a new lawsuit from the shareholders alleging that Elon Musk manipulated the stock price when he said that funding is secured. Meanwhile, funding was not secured. According to the texts that we got today, Elon Musk went back and forth with the head of the PIF. And according to Elon, he got a word from the head of the PIF that they are interested in buying Tesla. The whole thing, the entire souffle. And of course, Reverend Elon went public on Twitter and said, funding secured. This will be an important case for all of you MBA students because you're going to study this, whether the word of mouth is considered as a contract or not. In certain cases it is, but in this case, the tricky part is the word secured. Because the PIF would say we did not commit to anything. We just outlaid our interest in buying Tesla entirely. And then Elon Musk went public and said, funding secured. The word secured is the core of the problem here because funding was not secured. It was suggested, it was proposed, but it was not secured, quote unquote. And of course, the shorts who were shorting the stock lost a lot of money, and perhaps a lot of shareholders got misguided when he said funding secured by either selling their shares or buying calls or whatever damages they can prove. But this will be a very interesting case. Throughout the day, and even before the day started, we heard news that the board of Twitter is debating the bid from Elon Musk because there was a time limit. And if they cannot find a white knight to rescue them with an opposite deal, perhaps a better deal, they have to consider the offer from Elon Musk seriously. So we knew from the get-go that we could get news, important news, major news regarding the acquisition of Twitter today. The poison pill did not work out, once again because there is a time limit. The board of Twitter has a responsibility toward the shareholders. They have to at least take in consideration the offer by Reverend Elon Musk. And of course, the speculations were that we're about to get earnings from the company this week. We saw what happened with Netflix stock, for example, a massive crash of over 30%, and then we saw the crash of Facebook last quarter, and the thinking was perhaps the earnings from Twitter will be abysmal, and the stock might go down 20-30%, and then it appears to the shareholders that the board did not conduct their fiduciary responsibility of considering a very good offer, a generous offer from Elon Musk. So they had to do it. Elon played poker, high-stakes poker. He knew exactly what he's doing. He squeezed Twitter board in a corner, and he won big time. But we got the news. It is official. Elon Musk now owns Twitter. And of course, Reverend Elon tweeted this after the news, a beautiful message that reads, "I hope that even my worst critics remain on Twitter, because that is what free speech means. Amen." And don't worry, Reverend Elon, I will be in Twitter criticizing your ass 24/7. But here are some of the memes that we got. Here's Elon freeing the Twitter bird. And then we got the Twitter with the Tesla logo in. For the T, here's another one, Elon Musk playing chess with the Doge, and of course beating the Twitter board. Here's another one with Elon Musk peeking in the logo of Twitter, and of course, here's another one, the meltdown by the pro-censorship crowd. They lost big time, and here they are once again crying on the symphony of Elon Musk. Another one, Elon Musk, the Joker, is telling Agrawal, the CEO of Twitter, "Your men work for me now." Let's see how Twitter employees would like that. But here's the best one. Bill Gates, account suspended, gone. Here comes Elon with the revenge. But all joking aside, let's talk about the winners and the losers from this deal. We start with the winners. The obvious winner is Reverend Elon Musk. Now, don't get me wrong. I think the man overpaid for the deal big time. I think the company's worth about 20 billion tops. I think he should have waited till the earnings report, wait for the stock to crash, and then buy it at a discount. Or wait for the Fed to crash the stock market, and they will crash Twitter stock. It will go down by 50%, and then Elon can buy it at a discount. So again, I believe that he overpaid for the deal. But if you listen to Elon, he doesn't really care about how much he's going to pay. He has an endeavor here. He has a plan for the platform, and he doesn't care how much he's going to pay. But he is a winner because from a PR perspective, in the eyes of the public, he is an American hero now, the defender of free speech in this country. Free speech is under attack with the crazy censorship by the big tech oligarchy. But here comes Elon, the richest man in the world, evening the scale and defending free speech. He scored major points with the public. No doubt about it. So Elon Musk is the winner here. And of course, we are the winners because we can enjoy the freedom of speech. We can speak our opinions with no fear of prosecution, censorship, canceling, losing our jobs. We can say our opinions and criticize people in power without the fear of any backlash, any censorship, or hostile algorithms. Now, make no mistake, I do not trust Elon Musk, but he made freedom of speech the core intent behind buying Twitter. So if he doesn't live up to that, he will be criticized big time, and Twitter would lose all credibility. Elon Musk would lose all credibility. So we are winners here. And here's the last winner, former CEO Jack Bin Laden, with the beard thing going on and the Kama Sutra, whatever else. Today he's known as Blockhead, but he scored big, almost $1 billion in cash from this deal alone. So congratulations to Jack. But here are the losers from this deal. Loser number one is the Tesla culties, the Elon culties. Why? Because he has committed billions of dollars of Tesla stock as collateral for this deal. Meaning, if there is any margin calls along the way, any devaluation of the company, the economy goes sour, Tesla stock will suffer tremendously. And this could be the Achilles heel with Tesla stock. Another loser is Twitter employees, of course, because they're going to need a lot of emotional support right now, a lot of diapers, a lot of Kleenex, a lot of pacifiers, a lot of coloring books, a lot of counseling, mental counseling. And oh, by the way, on top of that, they might even lose their jobs because Elon is an efficient guy and he's not going to overpay all of these employees. He's going to cut down spending on Twitter and make it an efficient platform. Loser number three is the big tech oligarchy, the censorship machine, their allies, and promoters. For example, you have the former president of the United States who's supposed to be the number one defender of freedom of speech, the First Amendment. But unfortunately, President Obama was out last week calling for more censorship, calling for the big tech oligarchs to completely ignore the First Amendment because it doesn't apply to them. And he's calling for more and more censorship to combat disinformation, which is a code, by the way, for anything we don't like. Anything we disagree with, anything that challenges the narrative, that is disinformation. And it's not just Obama. Even the EU is now forcing big tech firms to tackle so-called illegal content. Now, these terminologies are innocent on face value. Disinformation, illegal content. But when you dig down, the devil devil is always in the details. And you can see that the end goal is to censorship and make it a one narrative way with no challenging allowed at all. If you challenge the official narrative, you are a Russian propagandist, you are a disinformation whatever, and all of this is garbage. So Elon Musk pretty much disrupted the big tech oligarchs and their allies. And I tweeted this before a few days ago. I'm not an Elon fan. Matter of fact, I'm an Elon critic. But this country is no longer free. It is a deep state globalist oligarchy. If Elon wants to throw a grenade and disrupt this corruption, then I support him in this endeavor. Because all of these oligarchs, the billionaires, they own the newspapers, the TV stations, all the websites that we get news from, and they own the publishers, Facebook, Twitter, and the likes. So there is no free speech, there is no free media in this country anymore, and it is a tragedy. Back in the day, we had free media. People could speak up, they could challenge the narrative. Not anymore. Look at the level of oppression that we had to endure during the Thing episode. For example, if you spoke up against the mandates and you said, what about natural protection? What about the limitations of the jabs? You would get banned immediately for disinformation, whatever. And we now know that these were valid questions. They could have contributed to the conversation and enriched the debate and perhaps saved lives. Back in the day, we could have spoken about that freely, with no fear of prosecution, censorship, canceling, whatever. But even now, here in YouTube, we have to use code words and be careful of what we say, because God forbid the robot police would go, what do you say now? And this is absolutely unacceptable. Yes, there are extremes, and the extremes have to be taken care of, but regular public speech, regular free speech should be allowed. The differences of opinion should be cherished and encouraged in a free society. I don't want to make this personal because this is a channel about stocks and financial markets, the economy, etc. But I am an immigrant, and this country is worthless. Completely worthless without the freedom of speech. There is no point at all. When people make sacrifices to be here, to enjoy the freedom of speech, only to be censored by the people who claim to protect freedom. It is an absurd reality that we've gotten to. We have a huge slice of the public who are actually cheering for more censorship, more draconianism, and less freedom. It's unbelievable what we've gotten to. So when Elon disrupts all of this garbage, he wins, we win, and freedom wins. And these lunatics who want to censor people lose. So they're losers in this case. Who else? How about the robots, the bots, the spammers? Here's the headline. It says, Johnny Depp versus Amber Heard. Nearly 11% of Twitter accounts participating in the discourse are fake. What are they talking about? Nearly 11 of all Twitter accounts participating in the discourse surrounding Johnny Depp's defamation trial against his ex-wife Amber Heard are inauthentic. New research shows the majority of those inauthentic accounts are supportive of Heard, while most authentic accounts are supportive of Depp. And this is according to an analysis conducted of 2,300 Twitter profiles by Cybra, I believe, a tech company dedicated to improving online distance by detecting inauthentic behavior online. So again, these bots, these spammers, the trolls, their goal is to change the public discourse, to engineer the public opinion. And of course, a lot of them are controlled by the oligarchy and who knows who else. So if Elon is going to reform the platform and end these robots and trolls, it's all for the better, isn't it? And here's the last loser. Yep, former President Donald Trump. Why? Because Twitter is being reformed by Elon Musk. It's going to be hot. Who knows what innovations he's going to include in the platform. On the other hand, the Trump platform, Truth Social, I believe, Dwack the Quack, is empty. It's a ghost town. Why? Because the #1 star of the platform did not even participate. And I said this in this channel before, by the way. I said if Trump starts to participate in Dwack and starts to tweet in his own platform, I believe that Elon Musk will reconsider because now he got competition. But it's too late now for Trump to participate, even though he says that in about a week or so he will be active in Truth Social. But it's too late now. Maybe Trump wins if he gets reinstated in Twitter, but he is a major loser because his platform will lose hundreds of millions of dollars if Twitter becomes hot again. And I say, what is the next episode of this drama? Is it going to be Musk versus Trump? Because for now, Trump is praising Elon Musk, but wait till he realizes that he's about to lose hundreds of millions of dollars. Will the bromance sours at some point? And if that happens, all I have to say is, pass the popcorn. I'm enjoying this show. Next, let's talk about the tape that we got today. In yesterday's video, I talked about a bloodbath in the stock market, but we have a rebound coming. Why? Because the market became extremely oversold, technically speaking. Now look, I've guided you through this like a baby, like a little baby, holding your hands and showing you step by step how to trade this market. For example, on March 25th, I tweeted this, the Kim Jong-un waiting meme, and I said waiting to short this bear market rally. And then on April 5th, I tweeted this, the Qs lost 3 important support lines so far today, and I gave you the Kim Jong-un nod, it's time. We made a video about it in this channel. And what do you know? Since that time, the Qs, the Nasdaq, went down by over 12%. Today, I gave you the Kim Jong-un nod to buy the dip. And what do you know? So far, we got a rebound. So if you shorted back on April 5th and you covered today, you scored big. Perhaps you bought some dips here and there. I don't believe that the rebound will last for too long, but for now, there's a lot of money to be made here, so we have to ride this rebound. I also tweeted this today. I said if you're going to buy the dip, buy in oversold stocks with no involvement with China, because if Beijing shuts down, we're all done here. Therefore, avoid the Chinese stocks, avoid the commodities stocks, and stick with the oversold tech stocks. These are the ones that are going to rebound the most, because the commodity stocks, a lot of them are getting really oversold. They might bounce too, but the problem with these stocks right now is the headwind from China, the draconian lockdown in Shanghai, and possibly in Beijing. Your confirmation to buy the dip in commodities stocks, for example, oil, gas, fertilizers, names like Alcoa for aluminum, Freeport-McMoRan for copper, all of these names that went down big in last week's activities, yet they're still up big year to date. The winners of year to date. The confirmation would be if we have any easing the restrictions in China, then the demand perks up again, we see a recovery in these stocks. But for now, the safe bet is play the oversold technical rebound in the most beaten down stocks. I also tweeted that besides earnings, because earnings could confirm the rebound or they could end the rebound. If we have bad earnings from Microsoft, for example, then the rebound is poof, gone. If we have bad earnings from Alphabet, from Apple, from whatever, that could ruin the party easily. Or if these earnings come out better than expected, they could fuel the rebound. So what do you do with your trades? Remember the rule. Always be closing. If you make big profits in the short amount of time, close, and then you can reassess. If you still like the trade, you can get back in easily. But an important caveat here is the US dollar. The dollar is hot, and this is not good news for commodities or for stocks for that matter. We will talk about corporate earnings in a minute, and you will see the devastating impact of the rise of the US dollar. But I tweeted this, the dollar needs to cool down for commodities and stocks to sustain any rally. The dollar is simply too high. So if we have a pullback in the US dollar, that could be supportive of the rebound and fuel the rally further. But if the dollar continues to move higher, I don't think the rebound will last for too long. And of course, with this inflation, the dollar is trash, but it is getting stronger due to the weakness of other currencies. For example, the British pound is getting pounded right now, and this is supporting the strength in the US dollar. Next, let's move on to corporate earnings, and let's see what we got today. In the morning, we got Coca-Cola, Activision Blizzard, and after the bell, we got Whirlpool. Let's talk about Coca-Cola, a name that I own in my portfolio, and I bought the name back in September of 2020. It was a deal back then. Nobody wanted to buy Coca-Cola. Everybody wanted to buy the hot tech stocks, the hot meme stocks, the hot stupidity stocks, the Robin Hoodies and the likes. But I told you, it's an excellent dividend opportunity, and Coca-Cola will recover. It is a buying opportunity. Since then, the stock of Coca-Cola went higher by over 42%. That doesn't include the dividends, of course. But here are the earnings that we got from Coke today. The sales growth continues to be hot, and the importance of this earnings report is it is an indicative of what's going on in the global economy. For example, sales in Latin America were hot. So are we seeing the bottom of the weakness in the consumer in Latin America, the weakness of spending that we saw last year? Are we seeing the recovery in Latin America? Is that the place to be now? On the other hand, you see Asia Pacific, the growth is positive, but be it lagging. Growth was also good in Europe, Middle East, and Africa, along with North America. All in all, the revenues growth for Coca-Cola went higher by 16%. Where else are you going to get this kind of growth in this market environment? What was behind the strength of Coca-Cola's numbers? You guessed it, the pricing power. The inflationary power of this company. They can increase prices with very little resistance. When we look at all regions, be it Europe, Middle East, Africa, Latin America, North America, Asia Pacific, there was positive volume sales across the board, with exception of Asia Pacific. But look at the price mix, the pricing power of Coke. A huge part of the increase in revenues for the company came from the pricing power. They increased prices and the consumer remains receptive, at least for now. But also notice the currency impact. The strength of the US dollar had a negative impact on Coke's results. Absent of that, we could have gotten a pristine report, but we will see this over and over and over again in many other companies' reports. The negative impact of the rise in the United States dollar. The problem is, will these other companies have the same pricing power of Coke or not? It's an important question to think about when you look at the earnings calendar that we have this week. Which companies will be impacted negatively by the rise of the dollar, and do these companies have the pricing power, the inflationary power to pass the extra costs down to the end consumers or not? If the answer is not, you want to avoid these companies entirely. When we look at the income sheet for Coke, revenues went higher by 16%, and here's the only alarming piece of this report. The cost of goods sold went higher by 17%. So the growth in expenses is exceeding the growth in revenues. But we're talking about the cost of goods sold here. We're not talking about other expenses where Coke can manage those expenses better. When we look at the selling, general, administrative expenses, they also went higher, but by only 11%. All in all, the bottom line, the net income went higher year over year by 24%. And look at this. When we look at the net operating revenue in all regions, the growth is positive year over year. The only weak spot is Asia Pacific, so this could be a leading indicator for other companies reporting this week. Companies with massive exposure to China could suffer if this is an accurate leading indicator. Next, we got a report from Activision Blizzard, and this was a disaster. It's not good because they missed on both the top and bottom lines due to the weakness in sales for Call of Duty. The revenues year over year went down by a stunning 22.28%. Expenses, on the other hand, went down by 13%. But again, expenses went down, yet also the revenues went down, be it in a bigger margin. And therefore, the net income, the bottom line, was down a stunning 36% year over year. You don't want to be in this company or any of those stay-at-home stocks. They had a pretty decent time under the lockdowns, but now that people are going out and about, the consumer behavior is changing and it is not favorable toward companies like Activision Blizzard. Next, after the bell, we got Whirlpool. Let's look at these numbers. What do they look like? Well, the net sales for the company went down by 8.17% year over year. Expenses also went down by 6%. But look at that, net sales went down by a bigger margin than the decline of growth in expenses. All in all, the net earnings for the company, the bottom line, was down by almost 28%. When we dig down in North America, sales were down 8.3%. In Europe, Middle East, and Africa, sales were down 7.4%. And then sales in Latin America were actually positive 3.8%, while sales in Asia were down a stunning 30.7%. So what is the take here from the earnings that we got from Coca-Cola and Whirlpool? Number one, Latin America is hot now, so perhaps we want to stick with companies with exposure to Latin America. On the other hand, we're seeing severe weakness in Asia Pacific. It's not just Coca-Cola's earnings, we have Whirlpool earnings, suggesting that we have severe weakness in the consumer in the Asia-Pacific region. So you want to avoid companies with mass exposure to that particular region. Number two, we're seeing a decline of consumer spending in the durable goods, and we will get durable goods sales in tomorrow's session, but this is a leading indicator that the consumer is changing their behavior. As inflation continues to move higher, they're cutting spending on larger items, be it washing machines, home appliances from Whirlpool, or be it cars from CarMax, Carvana. Those earnings were miserable too. So perhaps you want to avoid companies that sell larger ticket items because the consumer is changing their behavior, and this change in behavior is not favorable to these big ticket item producers. Anyhow, we're going to move on to cover the market information for you. We start with the performance of indices today. And here we go. The Dow Industrial Average closing in the green by 238.6 points, or a gain of 0.7%. The Nasdaq also in the green by 165.56 points, or a gain of 1.29%. The S&P 500 closing in the green by 24.34 points, or a gain of 0.57%. The sector's performances today were led by number 1, capturing the gold medal, communication services. The number 2 for the silver, technology. Number 3 for the bronze, consumer cyclicals. And the laggards for the day were led by energy, materials, and utilities. So we're seeing a theme here. The winners year to date are lagging. The losers year to date are gaining. This is classic oversold rally kind of theme. Sell the winners, fund the losers, and then we'll take it from there. The advance to decline ratios, NYSE 49% advancing versus 48% declining. The Nasdaq 55% advancing versus 40% declining. So all in all, the indices might have closed in the green, gaining 1% plus, but the breadth all in all was pretty much 50-50. Commodities, what's going on here? A massive drop in crude. The WTI is now below 100, losing over 3% today. Brent is down a little over 3.5%. Likewise, gasoline is down almost 2% today. This is all in the heels of the lockdowns in China. Yet we have positive activities for heating oil up over 4.5%, and natural gas is the winner of the day, closing with gains of over 6.5%. We'll talk about the chart of natural gas in the charts analysis. But here it is, softs. The only commodity closing in the green is lumber, gaining almost 1.5%. Besides that, cotton was flat, and the rest were in the red. Cocoa down, OJ down, coffee down, sugar down. Everything is down. What about metals? Red across the board, massive declines here, led by palladium. Palladium is down over 10.5%. This is good news for chips, by the way. Chip stocks could move higher from this point on. Copper down, platinum down, even silver is down over 2%. Gold down almost 2%. We'll see if we have a recovery or not. We will visit the chart of gold in the chart analysis. Meats, red across the board. Lean hogs getting slaughtered, down over 4%. Feeder cattle futures, live cattle all down. Live cattle futures down by almost 2%. Feeder cattle, on the other hand, down by almost 1.25%. What about grains? This is not how grains closed. This is the beginning of the new session, but here it is. Oats were down slightly. So was soybean oil. We have some volatility here because Indonesia initially said that they're banning the exports of palm oil, and that sent soybean oil prices moving higher. But then they said, oh, maybe not a blanket ban on exports. And then we saw soybean oil moving down. Likewise, we have modest losses for soybeans and wheat. Yet soybean meal was down by over 1.5%. On the other hand, we have gains for corn. Corn closing the day with gains of a little over 1%. And then rough rice continues to move higher, gaining almost a little over 0.75% today. Moving on to the big casino, the options market. What's going on here? The volume is down all in all, so we're again seeing a technical rebound, an algorithmic rebound with not a lot of participation from the options market crowd, meaning we're not seeing retail participating yet in a big way. We're not seeing the institutionals participating in a big way. That could be a bad sign about the sustainability of this rebound. But at number one, the hottest table by far is Twitter at around 950,000 contracts traded today. About 71% of those were calls. Good luck cashing those now. The deal is done. But here it is, Apple at number 2 at around 900,000 contracts traded today. About 49% of those were calls. So we have traders who are taking the opportunity of the rebound to buy more puts at a cheaper price. Tesla, number 3, at around 500,000 contracts, about 52% of those were calls. And here are the unusual activities that took place in the options market today. We start with the ticker IWM, the Russell 2000. They're buying calls, the 212 calls for the expiration date July 15th. Interesting. They're going further out here. This trade has conviction behind it, with expectations that the IWM could move higher by more than 9% by then. They paid around $2.70 a piece to enter this trade, all in all spending around $5.5 million. What about the ticker IGT, International Gaming Technology? They're buying puts, the 20 puts. The name was up today, big time, but somebody's fading the rip by buying the $20 puts for the expiration date, May 20th. with expectations that the name could go down by more than 13% by then. They paid around 70 cents apiece to enter this trade, all in all spending around $1 million. What about the ticker CVX Chevron? The name is reporting earnings this upcoming Friday. Somebody's buying calls ahead of time. They're buying the 177.5 calls for the expiration date May 20th. And pay attention here. Somebody's buying these calls. Somebody else is selling those calls. So we could have a shareholder of Chevron selling these upside calls as a hedge these upcoming earnings. Anyhow, from the buyer's perspective, the expectations are that Chevron could move higher by more than 13%. They paid around 70 cents apiece to enter this trade, all in all spending around $800,000. At the bottom of the table, what about the ticker GM for, you guessed it, GM? The buying calls, we have good news that we're going to talk about in the heat map analysis. They bought the 42.5 calls for the expiration date May 20th. GM, by the way, is also reporting earnings tomorrow. So somebody's buying these calls, somebody else who's a shareholder selling these calls. And the buyers are expecting that GM will go higher by more than 7% by then. They paid around $1 a piece to enter this trade, all in all spending around $1 million. Continuing with interesting trades, what about the ticker ARKKKKK for Tesla witch Cathie Wood? The buying calls, this is an interesting sign that the rebound rally could continue for a little while. It's going to be led by names like RKK. In this case, they bought the $60 calls for the expiration date, May 6, with expectations that the name could move higher by more than 10.5% by then. They paid around 80 cents apiece to enter this trade, all in all spending around $550,000. What about the ticker DWAC, Dwack the Quack? This is the Trump social media. They're buying puts now, betting that the name will go down big after the news that Elon Musk is acquiring Twitter. In this case, they bought the $30 puts for the expiration date this upcoming Friday, April 29th, with the expectations that the name could go down by more than 16% by then. They paid around $1.45 apiece to enter this trade, all in all spending around $1 million. And lastly, what about the trade for the ticker ABBV? The name is also reporting earnings on Friday. Somebody's buying calls ahead of time, the 170 calls for the expiration date, July 15th, with expectations that the name could move higher by more than 9% by then. They paid around $2.50 apiece to enter this trade, all in all spending around $1.2 million. By the way, here's the viewer asking me, what happened to your ABV puts? Please shed some light on this mystery. It's not a mystery, really. I bought puts on AbbVie. I own the name. So I bought the puts ahead of dividend day because when you pay dividend, usually the stock goes down. So I hedged by buying these puts to protect me from the dividend paying day and earnings this upcoming Friday. And then the puts, the expiration date this Friday, the insurance policy goes away. So far, AbbVie went down by about 9% since I bought these puts. So if we have a rebound on Friday, then this insurance policy of buying these puts has met its purpose. It served its purpose. I bought them as protection from a drop from either dividend paying day or earnings day. These two events are past. The put options are poof, gone. I book whatever gains I have. That's that. Moving on to the heat map analysis, what do we see here? The majority of the gains are coming from the northwestern side of the stock market. Technology, communication services, even healthcare, the big pharma names managed to participate today, but we're not seeing major gains from the big caps, specifically Apple. The majority of the gains came from chips, software, all of these high beta names. The losers year to date were the winners today. On the other hand, the losers today were the winners year to date. We're talking about energy, we're talking about materials. The fertilizer names were down big. Deere, for example, in industrials was down big. So we're seeing a mini rotation from the winners to the losers playing this rebound rally. Here are some important news for individual names. AMD, for example, was up today. We have an upgrade from Raymond James, who say that the name could go higher by more than 80%. All what I have to say about that is good luck. Have you seen the weakness in the Chinese consumer or what? And here it is from GM. GM announced today an all-electric Chevrolet Corvette. I don't know how you feel about that, but I believe that certain cars are sacred, among them the Corvette. On the other hand, the Corvette has been shitty for many, many years as of late. So Have at it. Then we have Tyson Foods. Tyson Foods now spending $60 million to give the workers free college. And I say, what is the catch? I am reminded by Don Vito Corleone from The Godfather when he said, "Why do I deserve this generosity?" Anyways, then we have Amazon. Amazon is reporting earnings this week, and we have more bad news for Amazon. Now we have a second warehouse where the union is planning a vote, and Bernie Sanders showed up today with Christian Smalls. And I believe with this inflation, they could pull a win. This will be bad news for Amazon. Will Amazon talk about all of this and the impact of unionization in the earnings call? Perhaps the earnings report could show signs of concerns. If we have organized labor in these warehouses, it's a major win for organized labor, a major defeat for the oligarchy. Another name reporting earnings this week is Mondelez. I happen to own the name. We have news that Mondelez is buying Mexican bread maker Bimbo's Ricolino for $1.3 billion. If Latin America is hot, then Mondelez has a major exposure to Latin America, but the problem is they also have major exposure to Russia, so this earnings report will be important. Moving on to the heat map for the ETFs, we're seeing international markets, for example, down across the board. The majority of the losses led by the EWZ Brazil, but we have gains for the EWJ Japan. What's really interesting is the weakness overnight from Shanghai. The Shanghai exchange was down by over 5% overnight, but we're not seeing this reaction reflected in the Chinese ETFs. The FXI, for example, the MCHI, they were down, granted, but not as down as the Shanghai exchange. We have weakness in commodities. Gold is down. Oil is down. The OIH was down. The URA, uranium, was down. Silver was down, but the bright light came from natural gas. The UNG is rebounding higher, along with the leverage index, BOIL, BOIL. The VIX was down. VIX proxies, VXX, UVXY were down. The inverse indices, specifically the SQQs, was down. Energy ETFs were down. The XOP, XLE were down big. Materials were down, the XME was down, utilities, XLU was down, be it modestly, so was real estate. So all the winners year to date are down today. And the winners are the losers year to date. Look, for example, at the XHB, the Home Builders Index. That's up big. The XRT Retail, XBI, Biotech, Chips, SOXX, Technology, XLK. So it is a rebound day, and it's being played. We will continue to play it until it's done. Moving on to charts, and we start with the SPY, the S&P 500, an hourly chart. We were hoping for a gap down in yesterday's video, and we got the gap down, which made the RSI extremely oversold. It was pretty much in the bag. The SPY was going to rebound. It wasn't an easy battle, by the way. It was a back and forth at around 422, 420, and then we got the rebound by midday. We started to see more energy, more buying, because in the morning it got a little scary with the news out of China that perhaps we will see a shutdown of Beijing, and the Chinese exchanges were down big. So there was a little bit of hesitancy in buying the dip. But once the European markets closed and we had no distractions from Asian or European markets, we saw the flow of buyers coming in, and the chart closed pretty much at the highs of the day. We're now looking at the resistance of around 430 once again. I believe that the rebound has more juice to it, but be careful here if you bought call options, specifically those of you who buy weekly call options. If you bought weekly call options and you see the SPY, the Qs gapping higher in the morning tomorrow, you gotta close, because you have no clue how Microsoft's earnings, for example, or Alphabet's for that matter, will come out after the bell. So if you bought weekly options, always be closing. But look at the RSI, it is just curling its way higher, and therefore I say we could squeeze more juice from this rebound rally until it tops. And here is the daily chart for the continuous contract, the SPY, the S&P 500. The good news is the bulls defended 4,232, so the possibility for reverse head and shoulder formation is still here. I doubt it will happen, but for now it could excite us to go higher all the way to 4,384.5. The momentum indicators remain weak, but are they bottoming? We have no signal at all. The momentum indicators are bottoming for now. On the other hand, the volume went higher on a buying day. This is a good sign for the bulls, an indicator that we could see more gains to come. And here is the SPX, a daily chart for the cash index. We are following up on yesterday's discussion, the Wyckoff upthrust pattern. Look at where the rebound came from, pretty much to the penny, to 4,200, which by the way was the number 2 target for the rebound, the Wyckoff pattern. So for now, if this continues, we can go all the way to 4,400. And then if we have a reversal from that point on, then you know we will go down all the way to the secondary test, which is around 4,114.65. Moving on to the Qs and hourly chart for the NASDAQ, again, we have a rebound, not from any number I anticipated. My number was down there at 316.5, but we talked about the number being conservative, meaning we could get a rebound at 320, 325. We got a rebound at around 322. It didn't matter what the number is. What mattered is the fact that the RSI became really oversold. The algos responded accordingly by moving the index higher. The resistance target becomes 334. Look at the MACD, look at the RSI. The assumption is we have more juice to squeeze in this rebound. Moving on to the daily chart for the continuous contract for the NASDAQ, the chart rebounded from the most critical support at around 13,300, but most importantly, the trend line in yellow. If that trend line is broken, say goodbye. But for now, we're keeping the trend line. The volume went higher. On a buying day, we could see 13,599 being recaptured once again as support. This will be a good sign for the bulls, bad sign for the bears. Until the reversal sign happens, we will spot that when that happens. But for now, we'll take it one day at a time. And here is the hourly chart for the IWM, the Russell 2000. The chart went below, gapping below 191.5. At that point, it becomes imperative for the chart to climb above 191.5, and it did exactly that. We're now looking at the resistance at around 196.5. The good news is the chart closed the gap and continued to move higher, closing at the highs of the day. This is a good sign indicating that the next target will be 196.5. But when we zoom in to a 5-minute chart, for example, look at the importance of 191.5. The chart gapped below that number and went over and over and over and over and over again, retesting this number as resistance and again as support before moving higher. It retested it as support at least 4 times by my count. This is good enough for the chart to move higher, to retest the next line at 196.5. The Dixie, the dollar index, the daily chart, what's going on here? No stop in sight. It continues to explode higher, and this is a bad sign for commodities and also a bad sign for equities. For now, the rebound that we're having is technical in nature, which means it could last until the oversold conditions are fixed, regardless of how the dollar is trading. But after the oversold conditions are fixed, the dollar doesn't cool down, the sustainability of the rebound will be under question. Gold, what's going on here for the gold bugs? Gold lost the most important support, 1,925. The good news for the gold bugs is the following. We do have support at 1,895, but the problem is we have negative momentum on both the RSI and the MACD. And the question is the negative momentum bottoming for now? I don't see a sign, at least on the MACD indicator or the RSI. If we see a rebound in tomorrow's session, for example, we could see signs that the momentum indicators are bottoming and hence the possibility of gold recapturing 1,925 once again. And here is crude 4-hour chart for Brent. We talked about 105.84. If that is violated, then the next target will be 100. And indeed, the chart went down to 100, but it got really oversold. We saw a beautiful rebound at around 100, despite the Beijing concerns, despite the lockdowns in China, despite the releases of the SPR, despite the concerns of a slowing demand, despite the Fed, yada. All of these are good signs that crude has the momentum to continue to move higher. It just needs that little spark, and that could be from any good news out of China. Let's move on to natural gas and hear what I said just a few days ago about the pullback target. Take a listen. Where is support? Support number 1, when we look at the daily chart using the Fibonacci retracement, support number 1 will be around 7. If that doesn't work out, the nat gas could go down another 12% or so to the next support at around 6.3. And here it is, exactly to the penny, at around 6.34. We got a beautiful rebound, and now natural gas is enjoying positive momentum once again. Is it going to last? Well, we have to see a closing above 7 for the day. That will be a confirmation that perhaps the pullback is over. And here it is, the daily chart for the 10-year yield. I believe that this is finally the top for now, but we have yet to have a confirmation. For that, we need a big flush down candle that erases a few days worth of activities. But perhaps we have leading indicators that could happen. Number 1, we have negative divergence on the RSI. Number 2, we have negative divergence with the MACD indicator. We're seeing red impressions on the histogram for the first time since March. This is a good sign that perhaps we're seeing a top for now in the 10-year yield. This will be good for the rally in technology, the rebound in technology stocks, the RKKs and the likes. But could it be bad news for banks and financials? Let's take a look at the KRE, the Regional Bank Index. We talked about buying this a few days ago. Unfortunately, just like everything in the stock market, it took a U-turn last week and it went negative again. But the good news is we have a channel with defined support and defined resistance, upper and lower boundaries. And the chart went down all the way to the lower boundary of the channel, retesting that support, and it rebounded higher today, closing at the highs of the day. This could be a good sign that if you missed on the KRE before, you have an opportunity to buy it again, and the target would be going back all the way to the upper band of the channel. But you got to keep your eyes on the yield curve. If the yield curve, specifically the 2 to 10s, starts to curl its way down toward inversion again, it will be a bad sign for banks, specifically regional banks. And here's the weekly chart for the TLT. So far, so good. We have a rebound higher. We're seeing the RSI indicator perhaps bottoming, indicating that the negative momentum is coming to an end. We could see a pop in the TLT, perhaps all the way to 128. And if that happens, once again, it would be a good sign for technology. Moving on to the 4-hour chart of the VIX. Yesterday, we talked about looking for a top in the VIX's chart. Today, we got the top, at least for now, the pullback. We're looking at a 4-hour chart. Look at the RSI indicator, for example. It got really overbought and it was begging for a pullback. And this comes on the heels of an impressive rally for around 59% since the VIX rebounded off 20. The MACD indicator appears to be topping for now. It is curling its way down. We're seeing these green impressions in the histogram getting shorter. These are all good signs for the SPY bulls. The VIX could move down all the way to the next support at around 24.29. And then we'll take it from there. What about the VXN, the VIX for the NASDAQ? Similar story here. Look at the RSI. It got really hot, overbought, and it pulled down, and hence the pullback in the VXN. The MACD is still showing green impressions in the histogram. We're seeing strength in the VXN. So the NASDAQ bulls, those of us who bought the rebound today, makes you a little nervous that perhaps we could see a rebound in the VXN, which will come hand in hand with a pullback in the Qs. But for now, we have a topping candle and a confirmation. So the assumption is the chart should go down at least all the way down to 30, and then we'll take it from there. Here's Apple, a daily chart. What's going on here? We have a rebound, not quite from 157, but look at the RSI. The negative divergence is still here, but are we seeing an attempt in reversing this negative divergence? Obviously so, but we're not going to do anything with this chart before we get earnings. We have alarming signs of weakness in the Asia Pacific. You're not going to buy this before earnings. It's just too risky. Now, are you going to short Apple ahead of earnings? Why would you do that when you have other opportunities in trading the stock market? The premiums are high and the pies remain hot and ready to be served. There are other opportunities out there. Here's Tesla, the souffle, an hourly chart. The chart is struggling at around $9.95, back and forth, back and forth, back and forth. The news of Elon Musk pretty much throwing Tesla under the bus as collateral for his Twitter acquisition could rattle the stock. But that has to sink in. This is not going to happen right away. It is a process. It's going to take time. And if that happens, then we could go down all the way to the trend line in yellow as the next support. The gap at around 981.75 was closed. If we zoom out to a daily chart, for example, we can identify 980 as support, a critical support, because over and over and over again, it has been acting as support and resistance. So if the chart loses 980, we could see a flush down. Tulips, Bitcoin, what's going on here? We have a rebound. The momentum indicators are moving higher again. Look at the MACD. We're about to cross, showing green impressions in the histogram. All good. The problem is, until and unless the chart climbs above 42,000, we're not buying. And even if it does, why would you buy Bitcoin right now when you have better opportunities in buying options, trading options in the equities market? It's not going to make sense right now. And I believe Bitcoin will stagnate. There are better opportunities in stocks. And lastly, AMC, a 2-hour chart, we're seeing the beginning, the positive momentum on the RSI and the MACD indicators. Could it be enough to take us all the way up to 21? Perhaps. And again, if you want to play a rebound, do you buy AMC? Do you buy call options on AMC or another stock? That's up to you. If the market rebounds altogether, names like AMC, the high beta names, the technology names, the RKKs will move higher together. It is your job to look at the Greeks, look at the options grid, and find out the best bang for the buck. Lastly, moving on to the economic calendar, what do we have tomorrow. We have durable goods. This will be important, specifically on the heels of Whirlpool earnings. And then we have the S&P Case Chiller Home Index. This is also important, along with the Consumer Confidence Index. And lastly, new home sales. Now, what do we have on the earnings calendar? In the morning, we have ADM, UPS, GM, PepsiCo, Raytheon, and after the bell, we have Visa, Mondelez, Microsoft, and Alphabet. Folks, if you think you've seen it all, you haven't seen anything yet. We're just getting started here. Buckle up your seatbelts because the action will continue throughout the week. But for now, this is all I got for you. Thank you for listening. Thank you for watching. I will talk to you again tomorrow. Take it easy.